Hey everyone, welcome back to Corporate Decoder. Today we're diving into AsiaFIN Holdings' latest filing, and let me tell you, it's a wild ride through international finance that might just leave you feeling like you need a decoder ring to understand it. Here's the hook. We will discuss how this Nevada corporation does business in Malaysia and whether a potential listing on the Nasdaq will save it. Before we jump in, if you appreciate getting straight insights from complex paperwork, make sure to subscribe. We also have a Discord community linked in the video description below where you can discuss financial filings. Scroll entity registrant fin, CAS Holdings, Corpdings, Corpding Nord Numeric. Scroll to AsiaFIN Holdings Corp is a Nevada-based company, but almost all their business is in Asia. That already creates some interesting complexity because the SEC filings now involve international accounting rules. This report is Form S1, meaning this company plans to offer shares to the public. They want to get listed on the Nasdaq, but if that doesn't happen, they won't go through with the offering. This is a big deal. They're both an emerging growth company and a smaller reporting company, which means they get to follow easier reporting rules, which means less to analyze. The company's main office is in Kuala Lumpur, Malaysia. If US regulators wanted to inspect this business, they would have a big stack of logistical issue trying to get things done. The filing has a section on risk factors, which is extremely important, so let's analyze it. These are things that can make the stock price go down, things that can threaten the business. They are worth reading carefully if you're considering investing. Scrolling our marketplace, it will harm our business. Non-numeric 6, they admit there are similar services already in the marketplace. If they can't compete, their business will suffer. They also point out that competitors might be able to offer better services or adopt aggressive pricing, which could hurt AsiaFIN. Scroll misconduct of authorized employees new nuances. Employee misconduct is a key risk, and they basically said people might steal from us or do things that are criminal. That's a huge risk to put in a financial listing. What internal controls do they have in place to avoid being victimized? Scroll cybersecurity is mentioned as a risk, and it's particularly highlighted because they process a large amount of customer data. A security breach could lead to big financial losses. Scroll difficulties in any potential investigation, Nornian. They state that US regulators will have a really difficult time investigating the company given its operations in Malaysia, which create jurisdictional issues. Scroll control company Nuix, the CEO and another director control over half of the voting shares, meaning it's a controlled company. That means the stock may be less attractive. Let's check out the prospectus summary section. This is supposed to sell the company to you, so they should mention the good things here. We should be skeptical if they have long list of we may not succeed without presenting some we are going to succeed. They present themselves as specialists in payment processing, automation and regulatory technology with over 90 bank customers. That sounds great. They state they have a web-based payment processing system for check clearing used in central banks. Check 21 standards in USA. Similar systems are sold in other countries including Malaysia, Thailand, Pakistan and even Saudi Arabia. Scroll reverse stock split new Nuptev. They went through a reverse stock split where they combined existing shares into fewer shares. Companies do this to boost the stock price, often to meet minimum listing requirements for exchanges. A reverse stock split can be a red flag. Scroll Utuck and scrolled so. Out with a lot of discussion of potential downsides. In the beginning, let me try to find something that is more promising. Let's check their finances in the coming sections to understand where they are with raw numbers. Now we get to a good part, the numbers. Let's check their unaudited balance sheet as of March 31, 2025 and the audited balance sheet of December 31, 2024. They have accounts receivable net, meaning money that has not yet come in of 947,519 to 4th and voted from the 984,000 to 13 of the, which is what account receivables measure. Scroll preferred stock 00011 par value numeric TFAR. They have no preferred stock, so investors' holdings won't be diluted by conversion. 600 million stocks available and they only have 81 million issued. We already talked about it in the prospectus section. This is usually not great because in financial engineering, most companies give a big option to themselves to issue more stocks in the future. And having that availability means current people's stock will be diluted. The biggest item is retained earnings, accumulated deficit, negative 8,500, 22,000, and 22,000, 22,000, 29, and negative 8,039,600, meaning they're not earning money. The key question is, will they become profitable in the future with this cash infusion? About their operations and revenue, let's scroll to contents and consolidated statements of Accessions. From the results of operations as of March 31, 2025 and 2024, we can understand more about what they are claiming. Revenue is 621,179 compared to 519,752. A 19.5% gain in revenue is great. But if you look at other numbers, gross profit went from positive to being a negative loss of $6,913. This is very bad. This means their cost of revenue is higher than their revenue itself. Their selling, general, and admin expenses went up big to $485,831. This is going in the wrong direction, as this means operating the business is getting more expensive. Looking at year-end results for December 2024 versus December 2023 may shine a better light. They are operating mostly in the fintech area, followed by RegTech. RPA actually resulted in negative gross profit, but only accounted for $330,000 of business. Their total assets are fintech 1,357,920 tonnes, RegTech 1,805,000, and RPA for almost 1 million. This means RPA has very little revenue but occupies almost 25% of their total assets. Let's check out if Muchanda's discussion and analysis section of this filing will tell us a bit more. The company raised $327,600 via direct private placement of shares, meaning they are definitely in need of more cash. We operate through our wholly owned subsidiaries, meaning they have many international branches that they own. Remember how we said operations outside the US means less control? Here you go. Let's be sure to check out how they plan to use the funds received from the offering if it goes through. Scroll offer is exercisable for 45 days numeric stat. About 30% of the money will go to market expansion, 30% on additional market expansion to Saudi Arabia and the United States, and only 40% is for general working capital. Again, are they spreading themselves too thin? Reverse stock split. Effective numeric C, they had a reverse stock split and will sell shares at IF5. The board and insiders control over 50% of the voting stocks. All of these things may indicate the company desperately needs cash and may cause a delay or even denial of their listing application. Scrollability to influence corporate matters. Al No Nu and their affiliates will continue to greatly influence the outcome of all matters that require stockholder approval, including the election of directors and approval of significant corporate transactions. Alright, that's our breakdown of AsiaFIN's latest filing. This company is really interesting because it wants to list itself on the Nasdaq, while also having operations mostly outside the USA. While I like that they operate in technology with great potential, it may spread themselves too thin in the process when their past record doesn't really show them to be profitable. They highlight potential operational and technological risks from using AI. A lot of what-ifs from external impacts, which is great that they think about it, but there are no really tangible plans from the report to fix the underlying fundamentals. So, would I invest in this company? I will give it a pass since there are way too many red flags. Though, what's your take? Drop your thoughts in the comments below and let us know what you think. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, and I'll see you next time.